All right. Good morning, everybody. Good afternoon, depending on where you're tuning in from. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Hopefully, everybody is doing well here this morning. I know most people may be expecting Glenn, but Glenn is still out. He will be back with us tomorrow, so hopefully that should help you guys out. We will be doing afternoon market action on Wednesday, which Glenn should be here for. So if you want some more of Glenn, make sure to head over there at 2 o'clock Eastern on Wednesday, and you can see us both there. If you guys can hear me out there, just start typing in VV Nation into the chat. Eden, good morning. Roger, VV Nation, good morning. Hopefully you're doing well. We should be live both on Facebook and on YouTube, so everything should be set, should be a-okay. So hopefully you guys are having a good morning. Today's definitely been an interesting one. This weekend has definitely had a lot of news that we need to be aware of. So it's going to make our session here today news packed and have a lot of stuff to cover. Awesome. Starting to see the VV Nations coming in. Reamer, Sultan, Martin, Albert, Drew. Good morning. Hopefully, good afternoon. Hopefully you guys are all doing well. Glad you guys can make it here today. Also, if you guys are just now getting in here, or if you've been here for a second waiting for us to start, make sure, as always, smash that thumbs up right below me. All that helps us out with the YouTube algorithms. It doesn't cost you a thing, and it helps continue to grow this awesome community that we built, the VV Nation community that we built over the last few years. So if you haven't done that already, feel free to do so. That helps us out tremendously and helps us allows us to continue to do these types of segments in our streams. So would appreciate that greatly if you did. Awesome. All right. Mr. Mex, up at a 52-week high. Yeah, we're gonna be looking at some of those here in a little bit. So just be patient. We'll get to it. All right, so let's dive in, take a look at what's going on right now, recap what's going on in the market here today so far, and then move on from there. So right now, currently, we are one tick into the red. Therefore, the color guard is mildly bearish, and VectorVest does not advocate buying any stocks at this time. No surprise, we see that one red light coming from the price column, which shows that we're moving lower day over day and week over week. Interestingly enough, the RT and the buy to sell ratio are remaining flat to slightly higher. RT up slightly, buy to sell ratio pretty much flat, but it's at an extremely oversold condition to begin with. So really not expecting to see the buy to sell ratio move too much more from where it's currently at. But looking at the RT, we can see it has risen day over day, but still lower week over week. And for those who may not be familiar with it, the RT is what we like to call the relative timing. It's an indicator here at VectorVest that's cast on a scale of 0 to 2, and above 1 would indicate that the short-term trend of the market is up. Below 1 would indicate the short-term trend of the market is down. So at 0.73, the short-term trend of the market is down, but it is slightly improving compared to the previous trading day. Now, looking at our advanced declines, we can see we saw weakness right out of the gate here this morning at 9:30 when the bell rang. Market started taking off. Saw them rallying up until about 10:30 or so. And from that point forward, we've seen some profit taking, and now we're coming back down to the session lows here so far. So the advanced declines is showing the number of stocks moving higher for the day and the number of stocks moving lower for the day. So at 0.4, that tells us about twice as many stocks are moving lower so far this session than moving higher. A little bit above that, but right about 2 to 1 there. Good morning, Fabrico. Hopefully you're doing well. Glad to have you here this afternoon. I keep forgetting what time it is. It's different. Not used to being here for this stream. So got to remember what time it is here. All right. So with that, let's go ahead, jump into what we have in store to talk about here today. So we'll go to the viewer section at the top, and starting off with the major indices, the VIX, or the volatility index, is up nicely here today, up 4.5% so far. UVXY, a leverage ETF, up 2.2%. Then we look at the major indices. The Dow is actually down 0.6% so far. S&P 500 down about 0.5%. NASDAQ, surprisingly enough, being one of the best performers so far this session, slightly in the green, just shy of 0.2% higher. And then the Russell being by far the worst performer of the major indices, down 1.3% so far. So with that, let's go ahead. Now that we see what the markets are doing, let's go ahead and take a look at the news that we have prepared for. Actually, before we jump into that, we do have earnings this week. But you know what? Let's start off with the news, and then we'll work our way through this section here that we have for you guys today. So pulling up the news real fast. Starting off with the main headlines over the weekend. Currencies. Currencies have been really the main number one talked about thing so far over the weekend coming into today's session. And this is, just an article bringing this to everybody's attention if you're not familiar with it. Over the weekend, the pound, the sterling, the British currency plummeted and is getting close to parity with the US dollar. Currently, it's sitting at about $1.04 to 1 pound, but it's definitely been a lot higher over the last few months or last several years. This is actually the closest the dollar has come to equaling 1-to-1 with the pound. So definitely big news that could have a major impact. Realistically, a lot of the pound's drop came from the increase or the decrease in taxes, some of the new spending cuts and all the talk about from government. So that's really led to a major sell-off on the pound, and you're seeing an increasingly strong dollar. Once again, no surprise there. Everybody seems to be rushing for the dollar. It's okay right now, especially if you're in the U.S., because our dollar is now worth more. It can buy more goods, or it can help fight inflation. But once things start to calm down, you start to see people lose or start to take on more risk and start to diversify again, coming out of that trade or getting out of the US dollar. It's going to be interesting to see the kind of damage that's caused on that and how the currency rates start to change back to a more typical range there from what we're used to seeing. But one of the interesting things is, over the course of 2022 so far, the US dollar has gone up significantly here, while compared to other currencies around the world, which has definitely been helping it's been deflating other currencies across the globe, such as the won, the euro, the Great British Pound, the yen, you name it. But interestingly enough, over the last week or so, the Russian ruble has actually climbed 4.5% against the greenback this week, hit its highest level or its highest reading back in June. But at that point, it's been slowly pulling back, now starting to creep back higher here. But it's kind of interesting since all the sanctions and everything got brought up and got implemented, it's kind of taken their currency out of the global basket. So maybe this could actually be a silver lining for the ruble where, because it's not directly influenced or it's not directly correlated or mixed with other currencies, could be helping save them a little bit. Granted, maybe not in the long term, but at least for the short term with inflation going on, could be impacting it and helping actually, whereas most people thought it would be hurting, could be having an opposite effect from what politicians expected from sanctions. So something to keep an eye on as we move forward in this market, especially. Strong dollar, bad for external U.S. earnings. Yeah, strong dollar is definitely bad for companies because it lowers the amount that they're taking in, so it lowers their total revenues. But as a consumer, it definitely helps having a stronger dollar because like I said, it helps combat inflation because if your dollar is increasing and inflation is going up, that dollar is not going to be losing as much as if the dollar is staying flat and inflation was rising. So it does benefit U.S. consumers for the short term, but it's going to be interesting to see, when eventually that starts to pop, because as we've seen with a lot of commodities over the course of the last couple of years, such as home building goods, when we saw those taking off, skyrocketing, and now coming back down to earth, oil skyrocketing over the last couple of years, now starting to finally pull back a little bit. This just seems like the next in that line and that strong pattern that we've seen with a lot of different commodities and currencies over the last couple of years or so. So definitely keep an eye on this as we move forward. Could have a very, very big impact on what's going on. Haas, welcome. Hopefully you're doing well. All right. But one of the other major things to keep an eye on is the Chinese yuan breached a 7-to-1 exchange rate against the US dollar for the first time in 2 years. And I tried to look for the article. I backed out of it at one point, and then I realized I wanted to try to use it. I couldn't find it again. it's one of those articles that you see scrolling through different places, and then you try to go back and find it. Of course, all the articles have changed again. But I can't verify if this is 100% accurate, but basically what the article was stating was with all the worries going on in the global economy, China started basically implementing a plunge protection team. If you're familiar with that terminology from here in the States, it's where the government goes in, uses banks, major buyers, and goes in and prop stocks up to avoid, the economic pain from a major sell-off in their markets. So we know Chinese markets tend to have a little bit more push or invisible hand help, and that seems to be kicking in and pushing some Chinese stocks up higher here today as well. Where are we going with this market? Your thoughts? Well, we'll talk about that in a second, Cookie. Just be patient. We'll get there. All right. So making sure wanted to cover everything else. Basically, the dollar is continuing to strengthen. Everybody's continuing to rush into the dollar because it's one of the strongest currencies going right now. It's definitely hurting other currencies around the globe. But one of the potential benefits that we've inadvertently given to Russia is that, because we've taken them off the U.S. SWIFT system and taken them out of the global economy, if you will, based off or from these sanctions, that may have actually kind of protected them from inflation because their currencies aren't being compared to other currencies. So therefore, that could actually be helping the value of the ruble so far. All right. So in other news, currency being number one, by far the most important news that we've had coming out over the last week over the weekend for today. But another interesting piece of news coming out from Atlanta Fed president talking about inflation, thinking that, we can still manage to pull out a softer landing than what everybody else is expecting, talking about how, yes, inflation is high, but he still believes in what the Fed is doing and that, they're on the right track to getting inflation under control and taming it, and doesn't see as much pain for the jobs market or the labor market as what Fed President Powell was talking about just last week after the rate hike. So, trying to calm investors' nerves a little bit doesn't seem to be having too much of an effect here today. But, it's nice seeing at least one Fed member trying to be positive with the current situation that's going on. But yeah, continued growth in payroll jobs. Bostic said there's a lot of positive momentum, and there's still some ability for the economy to absorb our actions and slow in a relatively orderly way. There we go. That's a tongue twister if I've ever seen one. Is the last week of September the worst week of the year historically? I don't have an answer for that, Eric. I haven't done that study yet. Bostic also said we need to have a slowdown. We are going to do all that we can in the Federal Reserve to avoid a deep pain. I don't know. What's your guys' thoughts on this? Type into 1 if you're already starting to see some deep pain, in your local areas. Type in 2 if not quite yet. Everything is still looking pretty good. I want to see your guys' thoughts on this one as well. But while we're waiting on that, on Wednesday, the Fed approved its third consecutive 3/4 point interest rate hike or increase, and issued projections that showed rates rising higher and staying there longer than investors had anticipated. So this is definitely something, that caused concern. It's what's been pushing the markets lower over the last few days in the States and also globally as well. But it looks like Bostic is trying to come out, trying to help squash some of that fear that investors are currently experiencing right now. Deep pain is on the way. Yeah, I'm seeing a lot more 1s and 2s. A few 2s so far, but definitely a lot more 1s so far than 2s. Hoping for remarks would call market go up. Yeah, and so far, only the NASDAQ's been going up here today. Let's see what else we have. Along similar moves by the host, triggered sharp solace in equities. No surprise there. We are starting to see cracks appearing all across different markets. We've seen Japan Seeing the yen, they're not really accommodating it, so they're letting it continue to run hot, getting to some of the highest levels we've seen from the dollar to the yen exchange rate, and as far back as I can at least remember, probably even longer than that though. And then once again, the UK proposed tax cuts seem to pull fiscal policy at odds with effort by the Bank of England to tame inflation while interest rates increase. So the pound fell about 3.5% against the dollar to its lowest level since 1985. So that's really seeming to be the main driver. Right now, monetary banks out there, global, there are major reserves out there taking care of the monetary policy for different countries, seem to be trying to decrease the money supply, whereas governments are trying to continue to find ways to spend money and increase that money supply. And this really doesn't end up being a good combination between the two. So regardless of what your political affiliation is, both sides are spending all across the globe. It's not just, a certain party in a certain country. It's all parties across all countries are all trying to do the same thing. And they're trying to spend, especially if they don't even have that money yet, while they're the monetary policy is trying to combat that. So it's definitely a tug of war going on. And until we can get some proper fiscal policy, it's going to definitely put a lot more pressure on the Fed to continue to raise rates, and also on individuals' personal expenses and capital. So be careful out there with all this going on. You definitely don't want to be too weighted one way or the other, or too weighted in any certain asset right now, with so much news coming out about different things that could have positive and negative effects in the markets. There's little to no economic news on the calendar this week. Yeah, economic news for the most part is slim pickings, but there's definitely some interesting news that seems to be impacting the markets for sure, though, Lee. Japanese are intervening in their currency. So they said, so there's a hard line going out saying that once it hit 145 or 145 yen to the dollar, they would start, or they would be willing to, possibly try to fight that a little bit and trying to help stall it out at that point, or trying to help balance it out at that point. But then now that we finally got there, they don't really seem to be controlling it as much, and now they're actually taking a step back. So while they did say a while ago that, the 145 is their red line, they now seem to be stepping back slowly from that 145 comment. So while they have said in the past that they were going to be intervening at that point, they're now starting to come out and saying that they're going to be walking back a little bit from their previous comments, and maybe even let it continue to run hot. So be careful on that one and keep an eye on that. Yeah, intervene is another great word for manipulation. Yep. And countries all across the world are manipulating their currencies. So that's no surprise. Happens pretty much everywhere so far that we've seen. All right. Next up. Got that already. Must have accidentally clicked on that. Weaker demand for Chinese goods spell the end of shipping boom. So I know week in and week out during our afternoon market actions, during Trending Thursdays, during our mobile coaching streams, our mobile app coaching streams that we do on Thursdays, we get a lot of people always talking about shipping stocks. So I believe Zim, TNK, and a few others. And right now with, interest rates rising, with demand slowing down significantly, this could spell, bad news for these shippers who have been, riding an extremely elevated price for quite some time. So looking at the shipping cost slumps, 40-foot container from Shanghai to Los Angeles is halved in the last 3 months. Since the beginning of the year, we've gone from about, let's call that 14,000, now down to about 3,700. So you've basically been cut by, or your prices have decreased for shipping, what is that, by about 2/3. So, we're seeing a huge decrease in shipping costs, which could help normalize things. especially when it comes to trying to get price controls back under normal territory. Hey there, Mark. Hopefully you're doing well. Glad to have you here. Since we are at the low point, will the market go up in the month of October? I know there are a few economic factors. Francisco, unfortunately, I had to send my Magic 8-ball into the shop today. It wasn't reading correctly, but when I get it back, I'll ask and see what they tell us about the month of October. All right. So yeah, definitely, with so many people watching shipping stocks, I know we've talked about them a lot here over the course of the summer, throughout the course of 2022 especially. This is definitely something for you guys out there to be careful of and keep an eye on, because once again, the profits that they were seeing from the increase in shipping costs may not, hopefully will sustain them through this sell-off or through this, coming back down to normal territories, but only time will tell for that one. Preparing for Ian's visit in Central Florida. Yeah, stay safe. For anybody in Florida right now, stay safe. Make sure you have everything. Don't go outside. If you can, get out of there if you need to. But stay safe. Keep yourself and your families safe as well. But definitely going to be keeping you guys in my thoughts for everybody in Florida right now. Fiona Hammer, Canadian East Coast. Yeah. For anybody in Canada as well, for dealing with the effects of Fiona, you guys are also my thoughts. Right now, we got a lot of. This is the time that we see crazy coastal weather. So for everybody in those areas, thoughts out to you, hearts out to you guys. Be safe, stay safe, and do what's best for yourself and your families there. All right. So yeah, that's pretty much the main gist of that, talking about how much shipping has decreased. So for everybody, once again, that's holding shipping stocks, be careful. With the markets seem to be more focused, not about supply chain issues anymore, but more about inflation, rising interest rates, and possible recession. So if that's going to be what the markets are focusing on, trying to force the markets to get back on track and focus on what news is driving your specific stocks is not going to work. So don't fight the markets, follow the trend, let the trend be your friend. That's really the best guidance from what we're seeing with all the news here. Then oil futures head higher after touching their lowest prices since January. So we've been going back and forth. Glenn, why do I not have a sidebar? All right. Let's see if I can do this. Nope. All right. So for some reason, MarketWatch is having some issues, but it's not. The article is gone now. But in essence, oil prices, have been going back and forth. There's easily a case for the bulls. There's easily a case for the bears with oil right now. Throughout 2022, especially, the bull case is that at any moment you could have a huge shock to the supply chain, skyrocketing oil prices with what's going on over in Europe, and also the already, slow production from the hangover effect that we seem to be having after the lockdowns and COVID and all of that. The bear thesis, though, is that, with the Fed, Powell seeming to try to be the next Volcker, trying to do whatever it takes to get inflation down and get it under control, that could easily push us deep into a recession, causing a lot of pain throughout the global markets, a lot of pain throughout the U.S. markets. He's already let the housing market pretty much enter a recession and crash there. And he seems to be, doubling down on that with increasing their mortgage-backed securities on their monthly balance sheets, but also decreasing other assets. So he's increasing the mortgage-backed securities and letting them stay on their books rather than just write them off for a loss. And he's also, willing to handle that loss or take that loss on their balance sheets simply because, or simply because he doesn't want to take or have to write that off. And he knows that they're going to be going through a lot of pain. So I'm expecting to see over the course of the next year, or something I'm definitely going to be watching, is how the Fed and their balance sheet changes over the course of the next 12 months and seeing if we start to notice even more mortgage-backed securities hitting their books. That could have definitely a big impact on that. But also, I thought it was interesting getting back to the interest rate aspect of things, and also their balance sheets. The Fed and other monetary bodies or monetary policy controllers across the globe actually are taking big losses so far this year. I don't have the article. I think it was on Twitter. I saw somebody tweeting about it. But yeah, it looks like the Federal Reserve and other major monetary policy controllers are taking pretty big losses so far on their balance sheets this year, which could definitely have a big impact on that. So yeah, with that, now we've covered a few of the major news articles driving the market so far this morning. Let's get into it. Let's take a look at the big news stocks. So I have a lot of currency stocks or a lot of currency ETFs. Since we don't track specific currencies here in the States or here at VectorVest, we do have ETFs that we can track them by. So current one is the yen. It's an ultra short, so it's a leverage ETF on the yen. Right now, up about 1.7% so far. Then we have an ultra short on the euro, which is now below 1-to-1 with the US dollar, continuing to weaken even more. We'll get into DRIP and ZIM here in a little bit, but then we have the US dollar, which is up over 1% so far for the day. So, while some of these may not be the best time to enter right now, I still wanted to get as many currency ETFs that I could find so we could all take a look at them together. Let me try this one more time. There we go. All right. So got a few of them so far. Let's go ahead and take a look at those together. Is there a unit search for this? What do you mean a unit search for this? No, this is some that I just put together. Some stocks that I had from the ETF viewer that I put together in this one for us. All right, so let's go zoom out a little bit. First stock coming up, CYB, Dollar Tree, Chinese currency here with this one. We can see we had support for a while, broke down below that point, continuing to drift lower. We are at extremely oversold territories. If you're looking at, buying or selling this one, be careful. Volume is relatively inconsistent, so just be careful with that. That's one thing with ETFs that you do want to keep an eye on is the volume, which we'll take a look at here in a second. But then we have the ultra short yen, which has been steadily rising. We are at a level of resistance at 65.03. We need to see it break that point before we would really jump on board. But for the time being, that's if you haven't been, in this beforehand on this most recent run up. If you're waiting for a new opportunity, wait to see it break that level of resistance. The 3 and the 8 is positive, but MACD is pulling back, stochastics are pulling back, so we are seeing some softening in this sideways move here. The ultra short euro. So as we talked about, the euro has broken down below the 1-to-1 rate for the US dollar. And we were moving in this sideways channel. I'm going to get off support resistance for right now. Use my own lines. Horizontal. There we go. So we were really in this sideways channel for quite some time. And you can see we ran up back here. Ran up here back in July, came back down to slightly normalizing, and then took back off. Then we had this high here, retesting the all-time high at that point. Once, twice, and then third time it finally busted through that ceiling and now hitting a brand new high here. So this is where you really want to be extremely careful, in this territory. I mean, the euro has been softening, can continue to soften. Looking at the MACD, you do see a bearish divergence starting to form, but as always, with the divergence, you want to be careful. You never want to try to predict divergence. You want to wait for confirmation before jumping on with that one. So what you would look for that, You have the MACD steadily moving lower. We're just sticking that up a little bit. There we go. And looks like that divergence may be breaking here today, maybe getting invalidated if the MACD can close above this downtrend line. And then that way it would be confirming the new high shown on the EUO. Hey, Chris, hopefully you're doing well. Thanks for being here today. Hey, Glenn, hopefully you're having a fun time in up north. I'll say that way. Looking forward to you getting back and hearing all the stories. Hopefully you're having a good time, though. Dollar index over 114 today was less than 110 last week. Yeah, so currencies really seem to be the main drivers so far in today's headlines or this week's headlines. So, been starting to pick up all weekend, and those seem to be where everybody's keeping their eyes on right now. SOXL down the tubes. When do you see a big time short cover? When it starts going back up, Eric, that's the best answer. You know when the markets are done going down when they start going back up. In the words of Dr. D. All right, so yeah, with EUO, we could be seeing this bearish divergence being invalidated as of today. Need to see it close that way, but looking for strength, seeing some more strength to the downside for the euro, which EUO would benefit from as it continues to climb. All right, UUP. So this is the US dollar, and as we can see, hitting new 6-month highs, new 1-year highs. That bearish divergence that was setting up here to here and here to here seems to be getting invalidated as of today once again. So the US dollar continuing to strengthen. And while, yes, that's good for now, the dollar is getting stronger. So for U.S. Residents and people who live in the country, this is good. But outside the U.S., this is not good. And once you start seeing money coming out of the U.S. dollar, it's going to be interesting to see if it turns into some of the other issues or turns into the same pattern that we've seen with other commodities over the last 2 years or so. UDN. So this is the bearish or Contra Etf on the US dollar. Now, as I mentioned at the very beginning, some of these aren't going to be the best opportunities right now, but I wanted to bring some new ideas so that way you guys have something to keep an eye on. This is a Contra ETF on the US dollar. So as I was talking about, once that big money starts exiting the dollar and the dollar starts coming back down into normal ranges, look at this one, keep it on your radar. Maybe not right now, or maybe now's not the best time to be getting in, but all good things, what goes up must come down. So keep an eye on this one, keep it in your back pocket, wait for the right opportunity to start taking advantage of it here. And then the Japanese yen here. So steadily moving lower. Once again, we know that it is weakening against the US dollar. So as they said they were going to try, or they were going to intervene if it got to 145 to the dollar. Got there. Now they're backstepping a little bit, saying, well, maybe they'll continue to let it run hot. Maybe they don't need to necessarily come in and intervene quite yet. So, they've been wishy-washy, but if you're following the currencies and you do see that they start to step in and start to intervene, you could see a reversal with FXY. So could be a good money-making opportunity. But once again, keep an eye on volume. Volume is really going to be crucial with all these ETFs, no matter which one they are. And here's the pound. As we can see, dropping drastically over the last few days. Volume continuing to increase, telling us people are selling, getting out of it. They're worried about what's going on. And as we stated earlier, this is the lowest it's been since 1985. Would a pause from the Fed result in a possible short-term or weakening of the U.S. dollar? So by increasing rates, I think it would pause. You'd see some capitulation. But I mean, the drop here mainly comes from their own government. It's nothing that the Fed did to cause this. Granted, the Fed was causing all of this, but the significant drop over the last couple of days really been their own doing. So even though, yes, a slowdown would help slow that rate of the US dollar strengthening against other currencies, I don't think it would be enough to really reverse that trend or start to cause a decline in that strengthening trend in the US dollar. ULE. Canadian dollar not doing very well. A lot of your people go to Arizona during the winter. Yeah, I mean, a lot of Canadians go down to Florida as well. I see the license plates every single year to and from going down to Florida. And then you also see them going to Arizona. But yeah, I mean, but realistically though, the Canadian dollar was strengthening for quite a while and now starting to see the softening. It was definitely, I remember when I first started here at VectorVest is when I noticed how weak the Canadian dollar was back, early 2010, so on, and watched it strengthen, then watched it also start and decline again. We call them snowbirds. Yep. Hey, as long as they stay on the right hand lane and use their turn signals, I'm okay with it, Roger. All right. Then the Ultra Yen. So this is bullish on the yen, leverage ETF. So, if the Japanese or the Bank of Japan starts coming back and deciding that they are going to actually start intervening and start strengthening the yen, this could be an interesting one to keep an eye on and take advantage of here. So just some opportunities, some different currencies to take a look at. Usually we don't talk about currencies too much. So, wanted to switch it up, change it up a little bit from that. All right. So the next, oh man, I didn't have that here. So where's my, let me get my last article. I had another article, but where did it go? Here we go. Last article. AMC continuing to sell more shares. This was all known. Apologize for the late turn. But, this was all known with that special dividend, the preferred shares or preferred equities. I don't know from my understanding of it, when they first initially announced this, they weren't allowed to dilute their stock unless people voted on it, shareholders voted on it. Maybe I was mistaken on that. Or maybe they were voting on it just to be able to trade it in at a 1-for-1 rate with AMC. Maybe somebody that is more of an AMC person in here can shed some light on that. But basically, everybody knew this was coming. They stated this is pretty much the reason why they were giving out that new preferred share of APE. And so now that it's at close to the lowest point it's been since it came out, AMC is now going to sell almost 500 million shares of APE for $1.4 billion worth, which is the equivalent of about 25% of the debt it holds currently. So not even getting rid of all their debt and almost doubling their float once again. Oh man. Hey, anybody looking for a good time? We got some people in the chat there, guys. Ooh, a best adult dating site. Thanks for hanging out. Hopefully you like the stream, chat. All right. Moosehead Canadian beer is down to $1 a bottle at Sam's Club. Beer drinking is better move than Simmies or Tex long this week. Eric, I like that question. Is Moosehead Molson's? Because really, Molson's is by far the best Canadian beer. If it's not Molson's, I wouldn't buy it. But on that note, yeah, historically, whenever we have recessions, people like to drink their sorrows away. So, yeah, beer stocks, alcohol stocks tend to go up. On that note, though, this is the first time we've had a recession where we have these commodity shocks that we're experiencing. all this stuff going on in Ukraine usually provides 30% of the world's grain production. So without that, beer costs are going to be going up. The inputs of grain and barley and all that they use in beer, all of those are going to be going up. So I don't know. Maybe you stick with, the local producers, but, craft beers, local breweries, really are going to be having a hard time with the increase in commodities that we're potentially getting ready to see with grain. What we saw with oil is going to be nothing compared to the effects that we're going to see with the grain. If that starts to take hold, if they can't find a way of making up for the lost inventory there. You need to come try craft beers in Winnipeg. Okay. Good IPA, Sonny, because I'm more of an IPA fan. Let me know. Cooler weather should drop the demand for beer some. No, not really. Just changes the type of beer you drink. As a beer enthusiast, it doesn't really change how much you drink, just change the type of beer you drink. Instead of IPAs, you may go towards more of the Oktoberfest, those sort of things. So it's going to be interesting. Instead of the fruitier ones, you go for more of the woodsier ones. But yeah, it's going to be the impact of it. I've already noticed, the local breweries already are increasing their pricing by about $2 a pack. Sometimes even more. So it's already starting to hit them, but we haven't really seen the full effects of it yet. So I don't know. It's going to be interesting to see how beer distributors do, but I still think they're a good play for a recession. But I would definitely be keeping an eye on the cost of inputs, mainly due to the issues going on in Europe, to see how that impacts them. Double and triple IPAs in the winter, just like Contra Etfs. There you go. I like that, Jeff. Oh, man. All right. So getting back to it, another news article that we had talking about some of our other stocks. We'll be looking at oil, shippers, and then AMC. AMC down 8% off of that news that they're going to continue to dilute their shares to try to pay off just a quarter of their debt. Instead of waiting for the stock to start going back up higher, based off the cycles that we've experienced with those stocks, they're waiting until the absolute low to dilute their stock. Oh man, sometimes you just can't make it up. It's too good. You just can't make it up. All right. With TNK, you're definitely seeing the impacts. Well, interestingly enough, cost of shipping has gone down. We've seen that. It's dropped by about 2/3 since the beginning of the year. It's about a third of the cost to ship something now from China to Los Angeles since the beginning of the year. And we're just now starting to see that news. So this is really being news driven. Let's take a look at the earnings. Earnings steadily rocking and rolling. So even though the cost of shipping has gone down, what they're charging customers may not have gone down as much. So this could actually be a silver lining for shippers, increasing their profitability, where they're continuing to keep those rates high that they're charging people, even though the actual cost to ship it has gone down significantly. Therefore, increasing how much money they're adding on their books there. Drip. So oil's heading south. We saw oil bouncing or rebounding a little bit. Drip continuing to rise. So oil looks like that rebound wasn't long lived. And the recession fears, once again, taking the main stage as the number one worry. Not anymore about supply chains. Doesn't matter. The number one worry is recession right now. And that's what we're seeing driving oil prices. Is VV7 tracking ape? Honestly, Mark, I don't know. I have never checked. If Glenn's here, maybe he would know. Maybe he's checked in the past. I don't know though. But yeah, with drip, you're seeing this gap up as of Friday, continuation as of today. So let's go ahead, toss on some support resistance. We broke through that 2171 level just as of today. So therefore, if you're waiting for a breakout, be patient, wait for confirmation, because even though we broke through 2171, we are now right up against the next level of resistance at 2259. So we need to see this start to take back off or break through that before we have a decent run up until about 26 or so. Southern tier pumpkin. So my wife's personal favorite Nosmo is it's an NC brewer. It's Foothills Pumpkin. It used to be named something else, but then Foothills bought it out. They only had enough to make a very small batch. And by the time I went to the store to look for her, to surprise her, try to have a happy wife, happy life, they told me they'd already gotten all that they were going to get this year. They've already ran out, and they weren't expecting to make any more. So, yeah. Got to be careful with some of those. Isn't really the boom on TMP, TNK due to super tanker raids surging to your highs on record U.S. crude oil exports. Could be, but just shipping in general, really the main thing you want to be careful with. The cost of shipping, and I know a lot of people have been following a lot of shippers over the course of 2022. Just be careful with that. Alexander Keith's IPA is very good. Tord Brewery in Halifax. Check it out. All right, so that's the thing is I haven't been up to our northern friends in quite some time, or northern neighbors in quite some time. It's definitely been many years. So maybe we'll have to make a special trip up that way soon. Make it a VectorVest event. Any of our northern neighbors be interested in doing a touring series of our afternoon market actions on Wednesdays? Maybe we could go check out different places, meet some people locally, enjoy some good drinks, and get to chat face to face for a change. our world tour pub crawl, Roger. I like that. All right, ZIM, transportation, shipping, now starting to see the effects. You've been noticing the earnings per share dropping realistically for about the last 4 out of the last 6 months. And you saw this gap down here, ZIM continuing to drop down. A lot of people were focused on the dividend that they were expecting to get with this one, but that's one of the things I've always cautioned against. The dividend doesn't justify or doesn't make up for the loss in share price. It doesn't make sense to hold it. So for anybody following it, or for anybody still looking at shippers, be very, very careful. Yahoo reports very different earnings, 48.76. So that's the thing, Roger. VectorVest earnings are a lot smarter and more advanced than any other earnings out there. Our earnings aren't just historical earnings, which pretty much everybody else shows. Our earnings are a blend of historical earnings, but also a leading 12-month forecasted earnings. So you get a blend of both, not only what the company has been doing, but what big money is expecting them to do 12 months down the road. So when you see the current earnings rate, let's see what that is at, 18.75. So this is saying 12 months down the road, we expect to see ZIM have earnings of 18.75. So a year from now, this is what we expect their earnings to be. So if their last report was 48.76 and 12 months down the road, they're forecasted to have an earnings of 18.76 or 18.75. That's a 70, what is that? A 60 to 70% decrease from where they're currently reporting at right now. Stone Brewing. So Drew, my sister actually lives out in San Diego. And for the longest time, up until the last few years, they used to live right across the street from Stone Brewing. So when I went to go visit them for the first time when she moved out there, we actually she took me to Stone, and yeah, love Stone Brewing. And actually they just have a new, or for the East Coast distribution, they put it in Virginia, actually not too far from where we're at here. So yeah, Stone Brewing, a big fan fave. Gush. So the opposite of what we were seeing with drip. You noticed we had a huge run up all the way up until about the middle of June. From that point forward, we saw the sell-off coming in on the fears of recession. Well, markets got a little bit of relief during the summer period. Oil, no exception, as everybody started focusing more on the growth. Maybe, the soft landing. Maybe we aren't going to get into recession. False hopes from what we've seen so far. You saw Gush continuing to increase, but then now making a new lower high. On a longer term basis, lower highs, or just on any time frame, lower highs leads to lower lows. So we have lower highs here. We're seeing it lead to lower lows right now. So that's why, I've been stating, I know I've been bullish on oil throughout most of 2022, but over the last few months with this most recent run up, it hasn't felt sustainable. And you've seen the narrative shift from, supply chain issues, the war over in Ukraine, to a recession across the globe that could really hurt markets and hurt demand. So seems like the Fed is heart set on having a recession, causing a recession. And so therefore they're gung-ho about cratering prices, cratering demand. Therefore, Gush is going to struggle during that time frame. So be careful of that. While I'm still bullish long-term on oil, short-term, there's definitely a lot more pain to the downside on oil currently. Molson's, Mossport Canada Formula 1 race. I like that analogy, Eric. He says, Molson's at the Formula 1 race burns down the outhouses every year. Isn't that analogous to Jerome Powell torching the stock market? Yep. But he doesn't do it every year. Only when he goes into cash does he do it. So, it's a little different this time, I guess. But very, very close. All right. AMC continues to plunge. Lower highs, once again, leading to lower lows. Stock is in oversold conditions. You are seeing an improvement with the earnings per share. By paying off a quarter of its debt, that does make their balance sheet a little bit stronger. But, once again, stock was trading up into the 25 and 30 ranges. Why not dilute your stock then? Why wait until it's at the last 6-month low? Doesn't make sense, but yeah. A few things have not made sense with that play, but we'll continue to watch the developments as they occur. All right, so getting out of that, earnings this week. We do have a few stocks with earnings this week. There we go. So we have Micron. Interestingly enough, all the stocks, the bigger stocks or bigger name stocks out there this week are all sell rated. Paycheck, the only one that's not a sell rating right now, mainly due to the stronger fundamentals. But yeah, all the stocks deep in the red here. A few meme stocks with BlackBerry, Bed Bath & Beyond, Rite Aid was at one point. Nike, I'm sure, has been mentioned on Wall Street Bets, so that's classified, same as Micron. So really, all these stocks except for Thor Industries and Paycheck pretty much been considered meme stocks at one point this year or another. So if we graph all of them real fast, go ahead and change it to this simple layout. Put it on a 1-year look back. Micron. So the reason why we're looking at it at earnings per share at the bottom. Earnings is the engine that drives stock prices higher over time. If a company is growing their earnings, then that tells us that they're making money, and that will over time help increase their stock price because people buy stocks that are making money, or people buy into companies that are making money. Now, if the company starts losing money, then people are going to sell the stocks that are losing money because they don't want to stick around and join in on the loss taking. They want to jump into companies and join in on the profit making, not the loss making there. So over the course of the last few months, the last 3 months, we've seen a huge drop in the revisions to earnings per share, and that has directly affected the price of the stock. So going into an earnings release, I would be extremely cautious, especially in this field. Semiconductors have been struggling all across the board. Next one, Thor Industries. Thor Industries was the top VSC stock for quite a long time. Mobile home and RV distributor. And now, ever since the peak, right about the beginning of January 2022, we've seen those revisions and seen those earnings continuing to diminish, bring them back down to earth, and the stock prices also reflected that as well. So I'd be careful on the earnings with that one going forward. Now, Paycheck. Paycheck has been increasing earnings. The company is making money. Stock has really been in a wide channel throughout most of the last year. But with the Fed gung-ho on crushing and cratering the jobs market and, won't pat himself on the back until the jobs market is a lot worse than where we're at right now, that could definitely have a negative impact on a company that, does HR for smaller to medium-sized businesses. You don't need to be hiring. You don't need necessarily a huge demand for a private HR company. So therefore, you may be starting to cut back. That could potentially hurt earnings with Paycheck. So yes, the company is in good standings right now, but through a recession, when people are cutting jobs, people are getting fired left, right, and center, that could really remove the demand for a HR company that they would need, or an HR service. So keep an eye on the earnings call this week. I think that'll give us a lot of insight on, that aspect of the Fed's plans of fighting the labor market here. So I'm looking forward to seeing the comments that they have on their projections or their forecasts based off the current economic environment that we're experiencing here. Nike seeing a big revision downward ever since July. Retailers starting to feel the heat. You're seeing it steadily drifting lower and right at that sell territory as we're speaking here. BlackBerry, another one. Earnings really poor, negative here, continuing to move lower. Price has been reflecting that as well. Rite Aid, even after mergers, acquisitions, restructurings, whatever you want to call them, earnings still have not been improving. Companies' stock price continuing to not improve here. And then Bed Bath & Beyond, you thought there was hope. Then all of a sudden, board members, Ryan Cohen, then one of their board members sold out all their stock. Stock price cratered right in the middle of a huge run up. And they announced that they're going to be restructuring as well. So yeah, doesn't seem to be helping them out in their plans for going forward and how they're going to deal with their crazy amounts of debt. Really haven't seemed to be improving so far. So yeah, earnings, to recap all the earnings plays this week, be careful. There's a lot of weakness that we see in them here. All right, then today's big movers. So we talked about it earlier, but we talked about one stock that I didn't put in the list, but EDU will add into it since, there has been reports that the Chinese government is starting to boost purchasing of stocks in the Chinese markets. So we have seen Chinese stocks popping off of that news. Now, the other stocks that have been doing really, really well are gambling stocks or Vegas resort stocks. So I have 3 longs and 3 short trade candidates here for this for today. Let me see if I have my layout here. I should have my layout. There we go. So looking at let's go zoom out a little bit. So looking at when you have resistance here, you have a big jump up, strong volume here, could be renewal, but you are pulling back a little bit, but you do have resistance right at 69.27. We got pretty close to that zone here today, starting to pull back. Keep an eye on that, but if we can break that 69.27 and also that 70.50 level, we could see a big rally starting to come in with these. Looking at the next one, EDU had a big pop off the news that the government officials or government agents were going to start buying, or government bodies were going to start buying Chinese stocks to boost their markets. Saw a big run off of that news, but stalling out at that level of 25. So be careful with that. If we can see renewed life coming in the second half of the session here today, closing in the upper part of that trading range, could be a positive sign, but definitely one to keep an eye on for the next few days, see how it handles itself. And then out of the two casino stocks, LVS, by far my favorite one. You don't have nearly as much resistance or overhead slowdowns potentially in front of it. You have this level of resistance at 40.16. You can see it was in this tight channel between $40 and the low. Let's see where that is on the lower part of the channel. Realistically, putting it around 36, 37. You can see it was trading tight in this channel. A few times it broke down below or above and it snapped right back inside that range. Big move lower, just like a rubber band. That snapback factor. Just as you stretch it out even further one way, and when it snaps back, it moves further the other way. And so you're right back towards the upper part of that channel as of today. But once again, we do want to see it close above that level of resistance at 40.16 and get some follow through tomorrow before ever considering getting into it. Also, strong volume, which is definitely a positive sign here. All right, now 3 short trades for the week. ACMR, big move to the downside, still trading above $10. Volume's a little stronger, but still relatively weak, but you have this nice steady decline. You do have some potential support down here at 11, but still not a bad quick trade to make some money on here. GSUN, you saw the insane amount of selling as it ran up yesterday as of Friday. Where did it get to? 95 or so. There we go. Turn that off. Yeah. 95 level of resistance, clear selling pressure, getting followed through to the downside. Cody, I saw you in here earlier. For scalpers out there, for day traders out there, short-term momentum traders, this may be one to keep an eye on here. Then Law has a nice continuation to the downside after that gap down, continuing to move lower. It is now trading below that $10 mark. It wasn't earlier, but continuing to get downside momentum. So if you can find it, if you can borrow shares available to it, this could be an interesting short trade as well. All right, so that's going to be it for today for our session, our midday market recap. One last thing I do want to lead off with, VectorVest.com. VectorVest.com/masterclass. Joey or Glenn, if you guys are in the background, if you guys will pin this or put this into the comments so everybody can click on it. But we've got 3 days. So later this week, we have our stock market masterclass. It's a free trading course that'll be live for everybody. If you haven't registered for it yet at this point, what are you waiting for? Sign up now, register for it. Doesn't cost you anything and can give you a lot of new knowledge on how to tackle these current markets. Appreciate that. So guys and gals, if you haven't already, sign up for the course, get registered now. Click on the link in the chat there and get registered for it. Also, if you know any friends that, in trading clubs that you're part of, or know any friends that you talk stock with, tell them about it, send them the link, get them to sign up. They won't want to miss it. As Maria says, be there or be square. Exactly. It will be recorded, Roger, but it won't be available for long after after the original airing. I believe last I heard, now I could be wrong, I could be mistaken, but last I heard is that it's coming up this week, at the end of the week. It will be up for the weekend, and then come the beginning of next week, it won't be up anymore. So this is a limited opportunity to take advantage of. You don't want to miss it. Register now if you haven't already. And make sure to tell your friends, with these current market environments, this is the time more so than ever that VectorVest really pays for itself and makes it more valuable. My opinion, VectorVest is way more valuable in a down market than it is in an up market, because in an up market, you can throw darts at a dartboard and use that methodology to pick stocks and most likely make some money. It's when the bear markets kick in that a knowledgeable investor really starts to outshine the average Joe. So if you want to make sure you're in that knowledgeable investors category, make sure to sign up for the stock market masterclass and get registered for it. All right, so that's going to be it for me today. Hopefully you guys have learned something. Hopefully you guys have some few trading ideas for the week and going forward here. Once again, if you're new here, if you're been here and you guys have been enjoying yourself, hit that like button. It doesn't cost you a thing, helps us out with the YouTube algorithms, and allows us to continue to bring you guys content every single day. So if you haven't already, smash that like button. I see we've got well over 100. We've got twice as many people here than we have likes. So I know a lot of you guys haven't done that already. Do so right now. What are you waiting for? Let's get those likes up. I know. Let's see if we can have 100 likes by the end of the stream. So that way when Glenn comes back tomorrow and he sees it, he sees how many likes we got. Come on, you guys won't. Let's see if you guys can get that number up to 100 before we end the stream today, so we can show Glenn some good signs for the midday market updates. Oh, you guys slowing down. Oh, disappointing. Glenn's gonna be disappointed. Maybe he's not even gonna sing this week. Man, it's gonna be a sad time if Glenn won't even sing on Trending Thursday this week. All right, you guys are letting Glenn down on this one. All right, so with that, that's going to do it for me today. Thank you all for tuning in. Don't forget, tomorrow we have, tomorrow we don't have too much for you guys tomorrow, but we do have on Wednesday the afternoon market action with Glenn and myself, and hopefully he's not going to be disappointed when we start stream on Wednesday. If you guys can get to that 100 likes by the end of the stream. But then also on Thursday, we have our weekly mobile coaching stream at 11 a.m., both on Facebook and on YouTube. 2 o'clock, we have Training Thursday, which Glenn will be in the driver's seat for that once again. And then Friday, we have the stock market masterclass. So get registered for that. Tell all your friends and family to get registered as well. You guys aren't going to want to miss that opportunity there. So on that, it's been my pleasure being with you guys. Have a great rest of your trading day. Be safe out there. As always, let the trend be your friend. Follow the color guard, keep an eye on the color guard as we move forward. That's going to be your saving grace there, and watch that daily color guard report on a nightly basis. So on that, on that news, it's been my pleasure. Have a great rest of your trading day. Take care. Adios and toodles.